Hello, it's Friday the 28th. I'm FxPlew and this is the market brief. So the Chancellor's Economic Council, it's a bit like the B team for the Bank of England's MPC. They make theoretical judgments on monetary policy but carry none of the real world responsibility or implications. Name me a better team I told you so. Their latest meeting advised against further rate hikes for fear of the recession risk. So while they may think the MPC might be comfortable using a mild recession to bring down inflation, they've already lined up their I told you so position if things were to slip into a deeper recession. Of course, if the MPC plays a blinder, the council will just sweep all this under the rug and move on. It's a classic win-win without those real-world responsibilities. Nevertheless, next week's MPC meeting is expected to see either a 25 basis point rate hike or another 50 basis point rate hike from the Bank of England. Where the IMF have upgraded their growth forecast for the UK economy, it has given them a little more headroom to play with, and many in the city are reported to favour a 50 basis point rate hike, hoping that the monetary policy A team will just crack on and get the job done. But don't forget all the negativity thrown at the Fed, where prominent figures from banking and business have been pretty critical of the aggressive US approach, predicting that the Fed would drive the US into recession. Perhaps that affected the conservative Brits, because a nice cup of tea and a 25 basis point rate hike has certainly been the safer approach throughout the cycle so far. Despite the praise for pausing last month, Powell still wants to get the job done stateside. The Fed delivered another 25 basis point rate hike on Wednesday, and that was despite inflation having fallen to 3%. The logic here was not only to drive inflation that little bit lower, but also to help ensure that it won't reignite in the coming months, as feared by the IMF. Market expectation is for US rates to remain at this level until about year end, but there's no guarantees when they're committed to data-driven decisions. Meanwhile, Q2 GDP reported 2.4% growth between April and June. That was much stronger than forecasts expected, and that helped the dollar index up to around 101.85 yesterday. The short-term fate for sterling, meanwhile, is very much down to the MPC, and we'll need to see at least 25 basis points from them to follow the Fed and the ECB if we're to retain the current strength. A 50 basis point hike could easily see sterling over 129 against the dollar, and possibly 130 is within reach. For now though, we close out the week from just under 128 against the dollar. We're 116.55 against the euro, and euro dollar is around 109.80 on the open. So that's it, closing off another week. Thanks very much for joining me. Have a great weekend. I'll be back on Monday.
If you do not have a clue, then just tweet through and ask FxPlew.